Ben, anything you saw from the court or heard on the call that changes your opinion here?
No, I mean, look, I think you got to put the move today in perspective. This stock has added about $50 billion in market cap since February, before their investor day. Expectations had gone up, and I think what you saw with the first quarter of the Fox consolidation is some of the noise around a deal, a large deal, as you pointed out. Some of the investments they're going to have to make on the Fox side to build Hulu, which maybe weren't fully appreciated. And I think some digestion of all that stuff into the stock today is not surprising.
There seem to be few still who have doubts that Disney Plus is going to be a success, whether on its own or linked with ESPN Plus and Hulu in that $12.99 offering. Ben, what are the risks, conceivably, that would be something of a surprise to those who think at $6.99 and given the potential audience and all the content that Iger's talking about, this thing is going to run away with the market?
Well, I think there's this very difficult to answer question about quality and quantity. You know, one of the things that Netflix has done over the years is build just a massive amount of content. And we can debate whether, how good it is or not. That's sort of a personal preference decision. But they have a ton. I mean, there's years of content on Netflix. That's not what Disney's doing. That's not their strategy. And so the question is, if it's not all things to all people, even if it is an incredibly attractive array of brands around Disney and Pixar and Star Wars, et cetera, how big is that marketplace? And obviously, we don't know the answer to that question today. We think it's big. But, you do have to wonder about where expectations are versus where they can ultimately execute. I would say for all of the noise around earnings last night and the disappointing numbers, the incremental information on the Disney Plus front, I think, was clearly bullish.
Julia, going into the print, there are at least some investors I'd spoken to were wondering, are we going to return to talking about weakness at ESPN, given all the cord cutting? That really was not where the weakness was here. Did Iger discuss at all in terms of his expectations, given ESPN still remains a very important component, certainly when it comes to cash flow at this company?
Certainly, and I think there was actually some strength at ESPN in terms of advertising rates increasing. But what you have with the whole media networks business is the fact that you have, declining viewership because of the cord cutting issue. And it's not just a Disney issue. That's across the board in the media industry. So ESPN may be charging more, per ad, but they still have the fact that their audience is shrinking. So those ESPN numbers were not terrible, but I think it fits into this larger question of how Disney is positioning the company to be able to shift that audience over to a direct-to-consumer relationship where Disney's margins may be better. And I think Iger spoke, pretty significantly about how they're laying the groundwork for this to be a strong business now, but to perhaps move even more over into that direct-to-consumer business, depending on what happens with the pay TV business as a whole.
Ben, I feel like the bulls on this stock are talking about the new bundling announcement and the vision forward on streaming, and the bears on the stock are talking about the messy integration now of Fox and some of the other misses, especially ESPN and cable. So does it just change the time frame for Disney? I mean, which argument wins out there?
Well, look, I think, the streaming debate is going to take years to be answered. That's good news or bad news, depending on your investment horizon. I think on the core business, including the Fox assets, clearly there's an earnings reset that has to happen. But if you bought this stock in the last 3 to 4 months, I don't think you're surprised by issues around cord cutting, issues around licensing revenues coming in lighter. And you are focused on what is this company building in 2024? And in fact, in many ways, the accelerating cord cutting we're seeing at the industry level reinforces the importance of their streaming strategy in general. And that's why I think most people who have bought the stock of late are bullish. But, the earnings are going to be volatile. There's a lot of moving pieces. We've added a big acquisition into the mix. And so this volatility shouldn't be a shock. But I think most people will take this as a buying opportunity.
Finally, Julia, Ben mentions 2024, of course. Bob Iger is going to be long gone by that date. Is there any talk yet about succession in terms of when his departure takes place? I guess it's, a little less than 2 years from now.
Yeah, it's about 2 years from now. And look, he's extended his tenure many times. I hear from some people that he's going to extend it again. But he has also said adamantly that this is really the last time that he's extending his end date as CEO. But I think that the question really is what happens with the streaming business. There's some speculation that Kevin Mayer, who's running the international and streaming, relatively new division there, could be set up to succeed Iger if that division ends up going well. So I think it's too soon to say. As this company goes through the transformation, we'll see who emerges as the leader of the most successful divisions within Disney.